Good evening, everyone. My name is Glenn. I will be your host tonight. I'm a little early, so we'll wait to see, give some people some more time to show up. Nanny, good to see you. Can I get a sound check? Evening, Lee. Can I get a sound check? Good. Very good. All right. All right. All right. Let's wait a few minutes. We are considerably early. Sandy, good to see you. Lee, I'm sorry. It looks like I forgot to put that. I took a picture of that. Hold on one second. Of that scanner. I swear I took a picture of that. No, because I forgot. Sorry. Well, we'll go over it tonight. I wanted to put a picture of those filters in there, but sorry, I forgot. All right. So I hope everyone's fine. Any questions, guys, before we go, before we start, before we see what's happening? Lots to talk about today. Lots and lots to talk about today. We'll talk about the market. We'll talk about scanners. We're going to talk about earnings. We're in earnings season. I got several stocks to take a look at. Touch on trade plan a little bit. Do a little survey action. Yeah, we got plenty. Let's wait a few more minutes. Um, let's take a look while we're here. Let's take a look at the market and then we'll revisit as some more people come along. Market screaming higher since last October. A couple pullbacks, but that's normal. Higher highs and higher lows. That's a definition of an uptrend. Little sideways action now. Markets contending intending to speak to a lot of different people. Um, Nanny, we don't put our mics on the stage, unfortunately, but you're certainly welcome to chat into the chat box. If you have a question, I'll be more than happy to answer it. Um, Let me just see where my pen has disappeared to. All right, so we just have a consolidation going on here right now. Um, but you know what? Let's see. Maybe I can make an exception. But oh, hmm. Um, Here, hold on a second. Oh, if I could only type. David, good to see you. Been a while. Wilbur, always a pleasure. Let's see if we can get Nanny's audio working. Can everybody hear me except for Danny? Good, good, good. Miguel, good to see you, man. Yeah, that happens sometimes. Nanny, of course, I don't know why I'm talking to her because she can't hear me. Um, Hopefully she'll go out and come back in. And all right, let's see what's happening. All right. Good evening, everybody. Let's take a look at the market. We got a lot of stuff to talk about today. So let us begin. Stock market still uptrending, up straight up for the last 6 weeks. Um, Year to date, a mere plus 22%, which is quite gosh darn good. Um, Sideways action right now. The market's trying to decide what it wants to do, but then the market's always trying to decide what it wants to do. You got the election coming up. You've got earnings in the middle of earnings. We'll take a look at those. In fact, we'll look at them right now. Um, and the Fed, that seems like it may not want to cut as much as it said it would, which is, honestly, no big surprise, to be quite honest with you. So, there's always that wall of worry. The market is always climbing the wall of worry. So, um, we'll see what happens. Earnings. Let's just take a look. What's on the ticket for tomorrow? Let's see. Earnings whispers. Here we go. Tesla. Sounds familiar. I'm not sure if I know that one. Oh, yes, I do. Lam is pretty interesting. IBM, Newmont Mining, Las Vegas Sands. Who else? Whirlpool. Sure. Can't beat that. Um, Allard, Allard. Oh, no, I don't know those. Um, Hotels, Western Union. Geez, are they still around? I guess they are for make 44 cents. Lots and lots and lots of earnings tomorrow. Um, we'll see what happens. About a third of the stocks, I believe I read, have already presented their earnings. And, we just got a slew. Let me do this. Sorry. Let me do it this way. A slew of them, because I don't even know too many of these. Um, but there are a slew of them. So remember, if you're going to jump into something right now, guys and girls, keep an eye out. You want to make sure you keep an eye out for what's happening. I'm personally, I would not want to take a trade unless you're taking a straddle this close to earnings or very close to earnings. I like to trade on the outside of earnings. The implied volatility of options goes up. The implied volatility of stocks goes up. A lot of things happen around earnings, which can be good. They can be good for straddles. If you guys don't know what straddles are, let me talk about that. Let me bring this up. A straddle, very simply, is a very simple strategy where you buy at the money call and an at the money put. Same expiration, same strike. And what you're looking for, now you wouldn't look for it on a SPY, but what you're looking for is a big gap up. So let's just assume this is not the SPY for a second, and then you buy one, and then you usually buy it a few days before earnings. You should buy it like a week before earnings because you want to stay away from the increase in implied volatility. And then earnings comes out, so you get a few more days here, and then earnings comes out, and boom, you get a big gap up, or you get a big gap down. Doesn't make any difference. This is a strategy, a very rare strategy where if you thought the stock would gap up on earnings and it didn't, or if you thought that the stock would gap down on earnings and it didn't, then you were wrong either way. Doesn't make any difference. You can be 100% wrong, and this strategy will still make as much money as if you were 100% right. So, an interesting strategy where you can be completely wrong from what you thought, and it will still do very well as long as it gaps. This strategy relies on gaps. It can't go sideways. Not gonna make any money if it goes sideways. So there is oh, hold on a second. I did this. We know this, but I also must show the infamous disclaimer. All right. Educational purpose only. No recommendations. Okay. Um, there was a sister to it. This is not what I wanted to do yet. Hold on one second. Let me go over here, put this on another tab, and put that over there. Okay. Dan, good to see you, Dan. Um, so there's a sister to this where this is a straddle. The other one is a strangle. Nobody come up with these names. Strangle. Strangle and straddle. This is a straddle. A strangle just has distance between the strikes. So if this was, let's say the stock was 100, you'd buy 100 call, 100 put. This one you'd buy 100 and 250 call or 105, and then you buy a 97.5 put. So you've got some space between the two. Cheaper, but it has to move more. Well, no, Sandy, you want to look at this before earnings. You want to buy it maybe a week before earnings because then you miss out what you want to do. You don't want to be encumbered, if you will. You don't want to be affected by the increase in implied volatility. When implied volatility goes up as it does before earnings, yeah, then the price of the calls and the puts will go up. And then when earnings come out, implied volatility drops, and that will affect the value of your calls and puts. So yeah, always best to get in there about a week ahead of time, even 10 days ahead of time. And then you want that gap up or gap down. Yep. All right. So interesting. Straddles, strangles. Any questions, ladies and gentlemen? Not really good for anything else, to be honest with you. The only other time I can think it could work is if for a pharmaceutical stock, if the pharmaceutical stock has a big announcement, if they have a drug in the pipeline, and let's say they're going to announce the clinical results. Um, if they have good news, Zingo, boy, that stock will probably jump like crazy. If they have bad news, no jump up, certainly a jump down. So, clinical trials, drugs in the pipeline, pharmaceutical stock, that type of thing, you could use it on that. But 95% of the time, it's for earnings. Yep. All right. And we are in earnings season. So just a little sidebar, something to think about. Because if you had bought a call on this, then again, assuming this is not the SPY, if you had bought a call here, and let's say this was earnings, and it does boop that, well, bye call. So if you had a straddle, you'd have a call and a put, and then of course the put will do tremendously well. The call will go to zero, but the put will continue to go up in price. Now you don't have to sell. Another thing too, you don't have to sell the call. I've seen many times a stock will gap down or sideways a few days and then go boop. And if it does, you could conceivably make back some of the money or even go into a profit with the call also. If this thing expires over here, you should take them out about a month. You do not have to sell them together. All right. straddle. All right, so let's take a look. Market, again, screaming higher. There's your high, 586.12. That was on that red bar right there, I believe. Yep. Uh, yeah. So we're looking for an all-time new high. I think the SPY has put in some 40 plus all-time historic new highs this year. Yeah, saying you can buy and sell. You buy them together. You can buy them as a straddle, but then you can sell them separately. They're not connected, in any way. So again, uh, if you got a big pop up on the gap up, so you could sell the call, make a big profit, cover the price of the put. The put can only go to zero, so that's why the call continues to go up in price. That's how you make your money. And then maybe it starts to fall back down, and then the put starts to make some money too. Or even if put came to break even, at some point the puts were zero. So if the put increases in value, that would be good. All right. Let's go over here. Let me get this over here first. And then let's get up over here. Let's take a look at FinViz. We got the earnings. Forget we are in earnings season. Earnings Whisper is a pretty cool place to check on earnings. Um, yeah, yeah. If you buy them before the market, before earnings, again, you'll have less of a rise in time implied volatility. So normally, what happens? Remember, when earnings come out, if this was implied volatility, and let's just say this was the earnings date again on another stock, implied volatility basically is going to do this most of the time. And then you have your announcement, and then boom. Implied volatility is like, my wife and I live in Florida, and we just had a couple hurricanes pass by, thank God. God bless. They didn't come see us, which again, I hope and pray that all those people who were affected are helped. So if you were going to buy homeowners insurance a week before the hurricanes were supposed to hit, you can imagine how expensive homeowners insurance would be because the market is very nervous. The insurance market, not the stock market, the insurance market would be very nervous because they don't want to pay out any claims. So the price of insurance would go up. And then here's Florida, if I can draw it some nasty way. We're down here. This is Miami. Those all went out. Well, one of them went out and then up, and then the other one kind of went this way. But if you were down here 7 days away and said, man, I got to get some homeowners insurance. Well, this is what happens in the nervousness, the implied volatility of the insurance market would be screaming high. Once that goes out to sea or goes into the Gulf or hopefully goes out to the Atlantic and doesn't do anything and it's done, well, then the price of homeowners insurance would go back down. Same thing with stocks. Same exact thing. As the market gets closer and closer to the earnings announcement, it gets more and more nervous because it doesn't know what's going to happen up or down. Once that news comes out, once the earnings are announced, boom, the implied volatility drops. Here, the options are more expensive. Here, the options lose money in the time value because implied volatility has dropped. So you want to stay away from getting too close to earnings. Should strike be close to the earnings date? Um, do you mean the expiration, David, or the strike price? No. You want to get it as close as you can. I mean, you don't really know what's going to happen. If you buy it 7 days ahead of time, you might buy it down here and then it runs up. That doesn't matter because, well, let me get rid of all this mess. If the price runs, if you buy it here and then here's earnings, if it drops, that's one thing. If it goes up higher, well, then you bought the higher. If it drops, you're still going to make money. So, yeah, you can't buy it on, day before earnings just to know where the close or close to the close will be. You just have to get the best strike you can a week or so ahead of time. Dr. Mac. Good to see you, Dr. Mac. I think that's what it says. Dr. Mac, yes. Welcome. Um, okay. Questions on that, guys and ladies? Anything? Let me know. Type it in if you have any questions. David, did I answer your question? I hope. Um, so let's go over here to FinViz. Let's take a look at the groups. All right. Getting a little defensive here. Consumer defensive. Type it in, David, if you have a question. Consumer defensive. Um, Healthcare, utilities, it's weird. I mean, usually they run together. But this is a defensive, this is uh, groceries and tissue paper, toilet paper, things you need. Okay. Yeah. So like I said, if you have this, David, let's just say this is what it does, and this is your earnings date, and you buy it, you just have to buy it down here. That's all. You don't see this. So if this is 50 and this is 47, you just buy a 47 call and a 47 put. That's all you can do. And if it goes up, well, your call already went up. And if it goes up more, that's even better. And then if it gaps down, your put will make the money. All right. So, mhm. So again, let me get my pen. Consumer defensive pop, interesting. It's usually a sign of a little market that's a little bit scared. On the weekly, of course, one day doesn't usually mean that much. We still have technology with 3 month, 1 month. We still have technology, all right? And just a hodgepodge of everything else. This is cyclical here. This is defensive right next to it. This is bullish. This is bearish. This is happy. This is nervous. Healthcare, nervous, but it's at the bottom. So, interesting. Tech again, popping. We got a lot of tech stocks coming up. Tech again on 1 month and 3 months. We got tech earnings coming out still. Microsoft came out today. I believe they came out today because Microsoft had a big pop, so I'm sure that's earnings. Now I don't even know Microsoft. MSFT, that's it. Uh, MSFT, that's not Microsoft? Yes, it is. If I could type, it is. So we had a big pop today, Microsoft. We'll have to see how these other people fare. We got a lot more coming up. So that's going to make a big difference. Keep an eye on XLK. That's the technology sector ETF. Not a whole lot here, really. But it looks like it might be getting ready to pounce. Put in a higher low, put in another higher low, and another higher low. Putting in a basic flag consolidation here. Plenty of room to move on the upside. But again, you got to wait till all those numbers come in. All right. News. Not much news this week so far. Really not much news. Today, Monday, usually there's nothing. Mondays are usually barren when it comes to news. A couple of people speak. These guys love to speak of it all the time. They just love to speak. The FOMC Federal Market Committee people just love to talk. And there's some more today. Another guy talking, or is that a lady? Could be. Um, but not much. Yeah, the only thing was Richmond Manufacturing, which is okay, a little bit interesting, but not top of the list. They always put this website always puts a red folder by the most important ones, and this is not US. So you got to make sure it says US. You could filter those out if you wanted to, those different countries, but unfortunately, they don't stay. They go, but I'm not going to go in there and take out 10 different countries every time I take a look at this, so I leave them. So let's see, tomorrow, what do we got? We should have some interesting stuff where crude oil inventories, Another person speaking. Yeah, there's just not a lot of news this week so far. Even tomorrow, nothing. Facebook, okay, a little bit. Um, Thursday, new home sales, okay. Flash manufacturing, okay. Now we're getting some stuff. Um, Natural gas. So not a whole lot. Not this Friday, but next Friday will be non-farm payroll. That will be very important. It's the first Friday of the month, 8:30 a.m. Eastern. Make sure you watch that. That is very important. And remember, as I've always said, I strongly believe it's all about how the market reacts. Try not to decipher it on your own. It makes a difference what Warren Buffett thinks, but not so much us and, all of us. So, because we don't move the market, but those guys do. So it really matters what their thoughts are on that stuff, and the Fed too. The Fed's going to be looking at that number very, very carefully before they make a decision on what they want to do with the rates in November. But not a whole lot of news this week. It's interesting. It's kind of nice to take a break, man. All that news that comes flying out these last couple of weeks. Jeez. Um, all right. So earnings. Don't forget United Airlines. Thank you, David, for this. All right. This is kind of what I'm looking for. This is not a recommendation. We have we had a big bar. We didn't have a gap. Same kind of thing. But now we have a flag. So gap and flag post earnings. Why is that important? Well, because fundamentalists, the fundamental guys, the guys who look at earnings and quality of earnings and guidance forward, apparently they're happy. And the technical guys with this consolidation flag, if, and I say if there's a breakout, they'd be happy too. So it's kind of a, bus full of people, and usually the fundies and the tech guys aren't always on the same page, but for this, after owning earnings, they can be. So this is a bit overbought, but it could stay overbought like it did right here. So we'll see. I believe the airlines have been hot all year. For quite some time, not about all year. Um, but you can see here since August, this is a great run. Um, American Airlines, yeah. So I'm sure the whole group has been. I'm having a no Delta. Yep. So this is sector rotation. This is a industry. It's not a sector. This is an industry, how they move together very often. All right. So, I had some other earnings, I think. Didn't we, David? Well, maybe not. But since we're talking about earnings and we are in earnings season, let's talk about, and Lee, you wanted to talk about this anyway. Oh, was it BX? Thanks, David. Yeah, so here's another one, which may turn into a flag. Here's your gap. Here's a potential flag. I wouldn't want to see it go any lower. All right. And what was the other one? Oh, Bank of America. BAC. I think that was it there. And then it must have been because not only was there a gap, there was a big day. I mean, same kind of thing. You want the market to be happy with the earnings. And then you have this, but I'd rather see this. If we get another day here tomorrow, that would be a pullback flag, which I would still consider important and okay. Here's your gap. Here's your pullback flag if it breaks out. And again, none of these are recommendations. Sorry for repeating that, but I always feel like I have to, or I should, but I don't need to. I did put up the sign um, at the beginning, the disclaimer. So just keep an eye on these. And again, you can go to FinViz and you can scan for them. It always brings up the question, well, how do I find them? Right here, screener, FinViz. This is the home page. This is the screener. You click on that and go right here to earnings date. Hold on 1 second, Dan. Um, previous week, previous 5 days. Let's go with previous week. Way too many. I'm going to go here. I'm going to go over $15. That cuts us back. I'm going to go over here. I'm going to go optionable. It cuts a few more back. And then I'm going to go to technical right here. And I'm going to look for one that's trending up. Not 100% necessary, but still I will. Just above. I'll just go above the 20, the 50, and the 200. Cuts it back a little bit. I can go with a pattern too. Maybe I'll cut it back a little bit more. Channel up. Oop, maybe not. But let's just see here. See if we can find something. Well, I'll tell you what. No, you know what? I'll take this off. And I'm going to go with the gap. But the gap doesn't usually work very well here. And I'm still trying to figure out what a 0% gap is. But maybe it'll help. So remember, you can just hover over these symbols and take a look at the chart. These are really kind of ugly so far. Nothing yet. Well, there's one. Earnings right there. Yeah, this is one. Here's your flag. Earnings were, let me see, earnings was, oh yeah, right there. There was a little gap there. All right, that's interesting. First Horizon Corporation, a little bank, broke out above this last high right here. Well, pretty much, kind of, a little bit. So this is kind of what you're looking for, and you can scan for them, like I said. KKR, let's take a look, Dan. All right. Yeah, listen, but Dan, be careful because remember, it would be easy to think that, well, look at this, the earnings have to be great because look what this is doing. But I guarantee I can find a zillion stocks that do this, and then boom, we're somewhere down here. Take a big gap down. Just like right here. This probably was earnings right here. August. Yeah. Well, maybe not. That was the end of August. September, October. Probably not. But I can guarantee you'll see stuff like that. Stock runs up, you're like, man, let's go long, and then boop. Um, the chart before earnings doesn't have that much to do with the earnings themselves. You got to be careful. You got to be really careful. Yeah, good. Um, I don't see any earnings gaps here except for this one, but this was probably a gap. Well, this was probably earnings. June, July, August, September. I don't know. When the heck let's see if we can find out. KKR. I don't know why it's not on the chart, although it should be on the chart. Yeah, there it is. Yeah, that was earnings back in August. So, like I said, you had a nice run up right here. Here's earnings, and it was this day, and then boom, gaps right down. So, yeah, you got to be careful. And sometimes they do gap up, but I mean, this is what earnings are all about. Very, very, yeah. Thanks, Miguel. Very, very hard to predict earnings. That's why I like to stay away from the actual day and then see what happens. Uh, mm, when are the next earnings? Let's see. October 24th. Yeah, Sandy. I mean, look, if you um, were okay with the price of the options, let's just see. KKR. Yeah, yeah. I mean, this one doesn't have real intense implied volatility. So, um, you're 2 days away. So traditionally you're a little bit too close, but um, a 140, a 140. They're fairly expensive. Yeah. Well, that's out a month, but they are pretty expensive because the stock closed at, it looks like 140.17. Yeah. So, I mean, these are only 140. I mean, my gosh, $6. They're only 17 cents in the money. So they are pretty expensive. So even though the implied volatility doesn't reflect it too much, but this probably jumped up from where it was. Who knows what it was 2, 3 weeks ago or a month ago. So you got to be careful. So you could go here. See here, it says single. You can go down to straddle, and then the 140 straddle is right there, 1100. So it looks like some people bought them, probably for that same reason. So you can buy them together. You're just buying a call and a put, the same strike, same expiration, and then you can sell them separately if you like. And most, Thinkorswim has, I know they do. You can do the same thing here with them. You can put on a straddle and buy them together, or you can buy them separately if you like. But it's a little late in the game for these. All right, let's go back and see if we can find anything else. Let's see. I hope I still have it. Yeah, is it still? Yeah, okay. Let's just see here. There's a gap and a little flag forming. So you could put that on a list. The banks are gapping. There's PNC, another one. No, that's MTB, that's the same one. PNC, another bank. SNV, I don't know what that is. Another financial. Yeah, a little gap here. Put in a funky little flag. So, something to, and these things do it 4 times a year, man. So 4 times a year, got the potential for that. There's your gap. There's your, it's a pullback. It's not really much of a flag, but this might put in a pullback flag. You never know. So you always put on a watch list. Yeah, I don't know. Sandy, 1100, not so cheap. Um, but I mean, everybody's got a different definition of cheap. Um, and yeah, you might want to try it on a lower price stock. Try some cheap ones. Buy a $300-400 straddle and see what happens. All right, let's take a look. A few stocks I have on my list here. I think this is on the master list. IBM, nice run here since May of this year. Boom, IBM, and now IBM has a bit of a pullback. So stochastic running down. This is a pattern I like to look for in trend. You had a sloppy one here, but this really didn't, not really. But this is a pullback, right? Why? Because you got some sellers here. Obviously, you got a whole lot of buyers here. Some sellers pushed it down. If we can break up above here, then it would show that the buyers are back in control. No guarantee that it will continue to go higher, but this is what we look for: higher highs, higher lows, trend continue. That's what the pullback's about. I wouldn't buy it here. I don't particularly like to get into a trade when the stochastic is moving lower or moving down. You can move lower and then slide around. You can go down to 50 and start to pull back up. That's fine. But this one's still pointing lower and screaming lower. And so not a whole lot here yet. And then check on their earnings. Although was earnings on that earnings whisper list? I don't remember. IBM, October 23rd. Ooh, yeah, that's tomorrow. I thought I saw it. Yeah, so we'll see what happens with IBM. A little too late now to be getting into something. Tomorrow's their earnings, so we'll see. But an interesting little pattern nonetheless. Um, Carvana, who was I talking to? I guess Dan, you and I were talking. Carvana was, this is amazing in the stock market. Carvana down here, oh my gosh, $3 now, 197. That's about 64 quadrillion percent up. I don't even know how much that would be. That's amazing. And a lot of opportunities here to jump in. This is a pullback. This is a pullback. This was a bull flag, but it never broke. Well, it did break out there. That would not have worked if that was a breakout. I don't know if that's a breakout. This is a nice pullback. Um, He's got a lot of pullbacks, man. Jeez. Not a whole lot of bull flags, though, but a lot of pullbacks. Oversold, oversold. Not too oversold, little pullback, but still in trend. And you're looking for that to continue in trend, higher highs and higher lows. Boom. This was a nice reversal, little doji bar, mostly doji, big tail reversal. Bounces right off the 20 period moving average. Things you can watch for. But again, I don't know when any of these stocks, I don't know when their earnings are. What else? PLTR. Let's see. How are we doing in PLTR? Yeah, we don't want the weekly. All right. Got a nice little pullback. So still looks good. Got a half pullback on the stochastic. If we get one of these deals, breaks above here, breaks above here, that can be very interesting. Still has a ton of potential. This is another one of those doji reversal bars. It's not, doji reversal. I mean, a doji bar is more of a very tight. Let's see. There's a doji right there. Very tight open and close, but still anything with a tail, anything with a tail where this is the low and the buyers came in and pushed the price all the way back. That's a sign of buyers coming in. And you can see they pushed it up to here. We'll see what happens. We're going to find out. 10:30 on Carvana. Yeah. PLTR. I don't know. Let's see. November 4th. Big day. Um, so keep an eye on that. What else we got? Tesla. Tesla had a big pullback. You can call this this is a pullback consolidation. Big gap down, very oversold, something to keep an eye on. And I think their earnings are tomorrow too. So, keep an eye on that also. Um, where is, well, yeah, I did well and well. Um, beautiful trending stock. All right. Got a little pullback right here. It's not really a pullback though. It's a shame because that would have been a nice one. But you can still, this is more of a V bottom, but still oversold. Comes back to the 50. Beautiful trend. Boom, boom. Anybody? Any ideas? Any stocks? Microsoft, we saw that one pop today. PayPal, Carrier. Eh, nothing happened. The only thing I saw here was, um, I mean, you got this is a consolidation here. This is another flag right here. But this stochastic is moving lower. And the price is staying pretty stable. It's usually a sign of strength. Um, this was a nice pullback, oversold, right on a 20. Trend continuation. IONQ, Sandy? Is that what that is? Oh, there's a big pop. Had a flag here. Oversold halfway. Did pop. And man, oh, there's some news on this. Carry the 24th. Yeah, thanks, David. SoFi. I'm, I'm guessing earnings here. Technology stock, sector strong. Flag right here. And a little breakout today. A little overbought on stochastic, but it could stay overbought for a while. Yeah, that INOQ, that thing did pop. Jeez, I don't know if there's news on that. I wonder. Um, Anybody know if there was news on an IONQ? News? Yeah, I figured. Let's see. See what it was. And then I got to scoot. I got 1 minute left here. IONQ. No earnings. No updates. Third quarter results. When did this thing start popping? Beginning of October. I don't know. I don't know. Maybe earnings coming up. All right, guys, ladies and gentlemen, Scott is here. I got to go. Always a pleasure. Be well. And I will see everybody tomorrow, I believe. Yes, tomorrow at 3 o'clock. All right. Scott, let me, yes, you too.
Working Glenn in. Everyone have their pitchforks out and want more Glenn. But for now, guys, let's take a quick intermission. 5 minutes. That'll give me a chance to take control of the screen, get my slides up, get set up, get the recording, yada yada. Let you stretch your legs, get a drink. You know the drill. So I will see you in 5. Thanks.